All right. Hello and welcome to our weekly market recap live stream, everyone. We're here as every week looking over what has happened over the week previous and what we can expect moving forward. Now, I'm once again, as always, going to give everybody a little bit of time to settle in, join the stream, get comfortable. And in the meantime, I'm going to introduce you to our mentors. To my left-hand side, we have Bruno Perinelli. Bruno, welcome on the show.
Hi guys.
How are you doing today?
I'm doing all right, thank you. How about you, Oliver?
Pretty good myself. A little bit sick, but it could be much worse. And to my right-hand side, we have Jake Torres, our financial analyst from Philippines. How are you doing, Jake?
Yes, hi everyone. Doing great. Thank you for asking, Oliver.
Wonderful. So I see that we slowly have people joining in. Please let me know in the comments section if everything is working properly as it should be, and we can get started. Now, as is usual, let's start with what has happened this week. Bruno, can you please recap what were the most important events of the previous week in the States and in Europe?
Yes. First of all, there were a couple of indices, inflation indices in Europe, particularly in Germany. The higher than expected inflation that was driven by services and rent. Then the ISM price index revealed higher inflation expectations. And then a couple of Fed statements that were a little bit hawkish. And these two reasons are driving yields higher. We got the 10-year bond yield above 4% and the 6-month bond yield, or actually bill yield, at 5%, and the yields could get higher in the future. So that's driven especially the forex market, the stock markets, and financial markets in general, and especially that's been hurting the Japanese yen as the bond yields are a little bit flat, or comparatively relatively flat in Japan.
Thank you very much for the quick recap of the previous week. Jake, what did we have happening in Asia?
I think the most important thing that we of course that we kept on our radar, and we also discussed it last week, was the CPI print from Australia. And we discussed last week in our market recap that if we get a negative numbers versus actually lower number versus the forecast, that will be an additional conviction to our short bias or bearish bias for the AUD NZD. And during the release, we really got a lower number, which is 7.4% versus the forecast of 8.1, which we saw a good downside movement of the AUD NZD, which is in favor with our trade idea. And of course, we are still bearish for this AUD NZD in the medium term.
Wonderful. Thank you for the information, Jake. So, what a week we had, right? Quite exciting market moves, quite exciting statements. So, what can we be expecting moving forward? Bruno, what is the next week going to be all about in the markets?
Well, first of all, on Tuesday, Powell is going to testify, and that could make some moves on the forex market. Then there's the second revision of GDP and retail sales in the Eurozone. Also, the Bank of Canada, the Reserve Bank of Australia, and the Bank of Japan are going to release their interest rate decision. And the NFP, which I thought it was going to be released today, but it's not released on the first Friday of each month, but on the fourth Friday after the 12th day of each month. That's the correction. So we got the NFP on Friday the 10th.
Okay, so definitely something to be looking out for in the next week. NFP is always an exciting opportunity for the traders. Bruno, what do you recommend the traders do, or how can they take advantage of the NFP releases?
I think they should focus on how the market reacts to the NFP, how the yields react. I mean, the yields are a future indicator of where the currencies may go. If the U.S. bond yields go higher, say, then that would cause some interest in the investors, so that the European investors could sell some, let's say, euros and move them to the United States to buy dollars, and that would cause a fall in the euro dollar. Just that would be the case of a higher move in the US bond yields than European Eurozone bond yields.
Thank you very much. And last but not least, Jake, what can we be expecting in the Asian markets over the next week?
Next week, in line with our trade idea again with the AUD NZD, which is tilted to the downside. So we'll be watching on the interest rate decision from Australia, which is currently the money market is already pricing in by 75% that they will be hiking by 25 basis point. And of course, what is the if anybody there watching, which is a news trader, so the most surprising part, if you would like to trade at the back of the release, is if we get now if the RBA will just hold their current rate, okay, or if we, which is very unlikely at the moment, or if they will hike 50 basis points. So that is the most trading opportunity if you'd like to trade with the news. And if they will just raise or they will just hike as expected, so we are that is not in that case, we are not turning our bias for AUD NZD. So that is, it doesn't change our bias, which is still tilted to the downside if they will hike by 25 basis point. And currently, the AUD NZD is heading to the broken support. We'll probably be testing the support, and this is another area of a selling opportunity in line with our bearish bias.
So, do you think that AUD NZD is the pair from the Asian session that you would say has the most opportunities for traders at the moment?
As personally, that is one of my strategy why I would like to pair. If you would like to trade either AUD or NZD, I would like to pair the two because I would like to isolate myself with what we call the risk tone sentiment. Because if it is a risk off or a negative sentiment in the financial market, so that is both negative also for these two currencies. So I am not affected by the sudden risk sentiment. So that is why I always pair. Most of the time, I always pair these two currencies if I would like to trade this either of these two. And also based on the fundamental, based on the statement from the bank. Yes, the last interest rate release statement from the RBA was hawkish versus the previous one on December. And if you would like to analyze the statement, the RBNZ is more hawkish as far as the statement is concerned versus the RBA. So that is why, in terms of divergence of their monetary policy stance, that is why I would like to pair these two currencies.
All right, thank you for the very detailed information, Jake. You traders have an exciting week ahead of you. Make sure that you pop your head into our Discord channel where Bruno and Jake are going to be giving you tips and tricks throughout the week about the specific topics that they've talked about, and make sure to join their live sessions every day. They are both streaming, available to you, and if you want to get much more in-depth, in detail about how their strategies work, about what sort of risk management they use, about how you can become a funded trader at Lux Trading, you can always get those meetings with the guys. They're going to give you some time alone, and you can go over anything that you can possibly want. In the meantime, stay tuned for the exciting week that we have coming up, and I wish you all a wonderful weekend. Jake and Bruno, thank you for joining me, and everybody, have a good one.
Thank you.
Thank you.